Hello everyone, my name is Gerald and you're welcome to another week of Financial Tips. On this week, I want to talk about taxes. I'll be delving into withholding taxes and also value-added taxes. But for this particular episode, to be exact, I'll be talking about value-added taxes. Because if you all know, there is a new trend in town, there is a new law that's been applied just a few months ago about value-added taxes and the rates have changed. So we deemed it wise to educate the public on the new rates on how to calculate value-added taxes. So that is what I'll be talking about on this episode. Value-added taxes, as we all know, or for those of you who don't know what value-added taxes is a tax that is charged on goods or services, or be it any transaction between two or more people, because the government has to attain its revenue for whichever business transaction that takes place. Hence, the value-added taxes on the transaction. So what happens is, when there is any transaction, there is a VAT applied on that transaction, and at the end of the day, it is going to the government of the country. Value-added taxes is charged by applying. It used to be 17.5%, as we all know, but now the rates have changed. So I want to delve into explaining the new application on how to charge the value-added taxes. As a matter of fact, there's an aspect called the GET fund that has been added, and as well as the NHIL. The NHIL was already there together with the VAT, but now it has been separated together with the GET fund to charge the value-added taxes. So I'm going to use figures in this example so that you get a fairer idea or a broad idea on how the value-added tax is calculated. Let's say I'm a seller and I sell a product for 100 cedis. So in this case, when I'm charging my value-added taxes, I have my VAT, I have my NHIL, and also I have my GET fund. The rate for the NHIL is 2.5%. The rate for the GET fund is also 2.5%, and the rate for the value-added tax, the new rate, is 12.5%. So this is how it's calculated. You charge 2.5% of the GET fund on the 100 cedis of the product that I sell. You also charge 2.5% of the GET fund on the 100 cedis that I sell. So both of them make 5%, which is charged on the 100 cedis, making 5 cedis. So you add these two amounts together, making 105, which is the subtotal of the VAT you're about to charge. Then you will charge your 12.5% on the 105 cedis, which included your total amount taxable and the combination of the NHIL and the GET fund, making your VAT amount the 12.5 of that amount. So at the end of the day, when you have these three amounts, every month you go to GRA, you file your VAT returns. If you didn't make any transaction, you file nil. Make sure you file a duplicate just so you keep one for yourself and one to GRA for reference purposes and for auditing purposes in the future. At the end of the day, when you go to GRA to make those payments, you see a form for NHIL and GET fund, which you will fill. That is where you fill the component or the amount attributable to these two components, and then you make the payment for that. Also, the 12.5% of which you charge on the subtotal, which included the taxable amount of the selling price, the NHIL and the GET fund, you pay that amount as VAT. There is also a form for VAT of which you also fill, and also you have your paying slip over there of which you also make payment at any GRA office attributable to you, depending on the company that you work with. So generally, this is the whole concept of the value-added taxes. You just need to know how much to charge your NHIL, that's your National Health Insurance Levy, how much to charge your GET fund, and also your VAT. So it's 2.5% for GET fund, 2.5% for NHIL, and 12.5% for VAT. I hope this episode has been of great benefit to you, and wherever you are, you can really understand the new concept of the new value-added taxes that has been applied in our new laws in Ghana today, and you will not be so much in a fix whenever it comes to play. Also, make sure that VAT is very, very key in every business jurisdiction that you find yourself in, because it's required by law to charge value-added taxes, be it a goods or a service rendering business. So make it a point at the end of the day to charge it, because when the tax officials come to you for auditing or for inspection and they notice that you don't charge VAT on whatever business activity you find yourself in, you are liable to be charged a penalty or even a worst case scenario. So make it a point to always add VAT component to every selling price of whatever you sell or whatever service you render. Thank you so much for watching this episode. I hope you got something really beneficial. Don't forget to follow our Facebook page the CEO Project, and also don't forget to subscribe on our YouTube channel, also the CEO Project, to be abreast of whatever new episodes that will be coming in.